It's been a tumultuous summer for crypto.
Bitcoin continues its descent, a $2 trillion free fall.
The biggest threat yet to its survival.
After surging to more than $68,000 last year, Bitcoin had its worst month on record in June, falling below $18,000. Evangelists believe crypto is the future of finance.
There are some businesses that I think have a really bright future.
This is a volatile, highly cyclical asset, but the secular trend is here to stay.
The overall valuations are down significantly. That's fantastic for the business we're in.
Now is also the best time to do M&As.
Skeptics say it's a digital casino built on speculation.
The value of most cryptocurrencies is zero.
It is a highly speculative asset.
It will eventually blow up. It's a fraud.
How cold and long will the crypto winter be? What does the meltdown mean for the future of DeFi and blockchain? Is the industry overdue for regulation? At the Crypto Summit, we convene leaders from coins, blockchain, NFTs, and DeFi to provide actionable intelligence. This is the Bloomberg Crypto Summit.
Please welcome back to the stage Bloomberg Crypto Managing Editor, Stacey Marie Ishmael.
Hi, everybody. Stretch, shake it out. You had lunch, it was fantastic. We have an excellent afternoon of things for you still. Just a quick pause. Let's shout out to all the folks who produced those extremely slick videos and reels and all the folks taking care of social media today. They're doing such a good job. Thank you to my colleagues who are around the world. So, hopefully, you had lunch, you pitched SBF on rescuing you, you networked with folks a little bit. I saw the queue at the elevators, y'all. I saw you. For the second half this afternoon, we have some great stuff coming up, and I'm not just saying that because my panel is also after lunch. But we will be talking about a little bit more on the outlook in, what does a crypto winter even mean? What's the outlook for NFTs? Do gaming and blockchain actually belong in the same sentence? We really have some super interesting things. So thank to all of you who have stuck around for the afternoon sessions, and thank you to everybody who is joining us online. Right before I walked on stage, one of my colleagues published a story about the fact that Bitcoin had hit the highest price since June 14th, and my first thought was like, wow, that was when I was still thinking about the Luna Foundation Guard. So, it's weird how fast stuff moves in this industry. Nobody has mentioned LFG even once today. On that note, if you do have opinions, if there are things that you would like us to know, if you have questions for our panelists, please do send us questions. For those of you watching online, you can submit questions virtually. There's a white tab on the right side of the window. Click that and you'll be able to submit questions. And for those of you in the room, scan your QR codes. If I were wearing a badge, I would hold it up and show it to you flight attendant style. And when you scan that QR code, it does take you to a neat little interface where you can submit questions, and we then pass those to all of the speakers and the moderators. We also have a hashtag. It is hashtag Bloomberg Crypto. It is not hashtag Crypto Summit, which I've seen some of you move. I do appreciate the effort, but it is hashtag Bloomberg Crypto. And for our very next session, we're going to do a simulcast on Bloomberg TV, which is very exciting. We will be doing a live showing, or a live recording, as it were, of the Bloomberg TV Crypto Show, which airs live on Bloomberg TV every Tuesday at 1 p.m. So stay tuned. You are now our live studio audience. Welcome.
Please welcome to the stage Strike founder and CEO Jack Mallers with Bloomberg's Matt Miller.
Right. Thank you very much for joining us. I'm super pumped about this. As I was telling Jack backstage, I've lived in various countries for all my life, and transferring money across borders has been the bane of my existence from the time when I was a kid and I needed my dad to help me pay my phone bill. It cost almost as much to transfer the money to pay my phone bill as it did to work out my debt. To just this last January, when I was moving back from Berlin, I bought a house in Scarsdale and I had to transfer the down payment, which happened over like 3 different TransferWise interactions. So I'm really glad that someone's disrupted this in this segment, innovating here. Jack Mallers, as I'm sure you all know, has created Strike, which is a platform or an app that uses the Lightning Network. This is actually a Grateful Dead.
It's a hell of a time, brother.
It's actually,
also, thanks for having me. Yeah. But yeah.
So I want to first know, we were just talking about, you've grown up. You're digitally native, right? I mean, the white paper was released when you were like 14 or 15. So how did you get into the payments? How did you work out that we could use Bitcoin essentially to make frictionless payments across borders?
Yeah, this is a long story. I'll keep it, I'm looking at this clock right here. I'll keep it 60 seconds. But I've been in Bitcoin close to a decade, which is crazy. I look like I'm 12. Actually, it's not that funny. It sucks. I'm 28. So I've been in Bitcoin since my late teens. I got into it. So my grandfather was the chairman of the Chicago Board of Trade. My dad founded and ran one of the bigger discount futures brokerages. So I was growing up in my living room. All these big Chicago guys were building positions 2012, 2013, 2014. I knew the CME was going to build a product on this thing long before anyone else did, but just because I was eating dinner with the guys, right? And so my first foray was Bitcoin as this asset. It was like this commodity, very similar to gold. A lot of those guys early on saw the asymmetry in the asset, and its scarcity was really important to them. Fast forward, my work on the Lightning Network was to help those guys out. There were two main problems with Bitcoin, call it a la 2017. So I hope, I'm looking at the audience, I hope you guys are following. So this is like 5 years ago. The two big head of the New York Times, like Bitcoin sucks, and here's why. One was the variable amount of time it takes for a Bitcoin payment to be deemed final. It's like, it was kind of unclear. When's it gonna get into the blockchain? No one really knows. That was a variable. And then the variable cost is that it was a fee market and the market was free. And so the fees could hike on you. And so it was those two variables, time and cost. And so Lightning, for those that don't know, was a protocol that was designed to fix that for Bitcoin. And ideally, if you could fix the variable amount of time and the variable amount of cost for a Bitcoin transaction to be final, then a very simpler way to phrase that is Bitcoin transactions are relatively instant and basically free, which would be a huge deal. And so the story I like to tell is I was hacking on it. I was like the fourth node on the network. There's a buddy of mine in London, and we wanted to recreate the pizza transaction, like really nerdy shit, right? Like just sitting in my dad's basement, and I sent him a Lightning payment to London with my address, and he ordered me a pizza. Payment got there instantly and for free. And it was in that moment, Matt, where I was like, hold on a second. I just sent value to London in less than a second. It didn't cost me anything. There was no concept of interchange. There was no concept of T plus X settlement. What did I send? Did I send a credit liability? Did I send a promise of future settlement? It also happened to be cross-border, but also a commerce payment. But the protocol we used didn't know that, and it was cash final. It blew my mind. And I was like, this is the first innovation growing up by a bunch of traders that the price didn't matter. If Bitcoin was $10, I would have just had to send more of it. If Bitcoin was $10 million, I would have just had to send less. But the innovation was in payments. And I started to look at Bitcoin in conjunction with Lightning as a global value transfer protocol. Visa is a protocol business. Swift plus correspondent banking is a value transfer protocol. Western Union is a network. It's a value transfer protocol. And I started looking at this thing like, this thing is magic. It doesn't care if you're crossing borders. It doesn't care if you're buying pizza. It's going to get value, real cash final bearer instrument, this thing. Like, it is not credit. It is a physical digital instrument that actually travels and moves in real time. And it's gonna get there in less than a second and for free no matter where you point the thing. And that's when sorry, I went way over 60 seconds, but then 2 months later, I called my friend back and I said, you're gonna think I'm crazy because I know we're like these libertarian anarchists, like screw the state or whatever, but we're gonna redo it, but I'm going to make the payment out of my Chase account and you're gonna receive it in your Barclays account. And the innovation is we're gonna be live converting dollars and British pounds into Bitcoin on Lightning and using Lightning to get the value to London.
But by the way, so this is what Strike does also.
And that's when I founded the company, is I made an instant remittance payment for pizza to London with dollars and they received it as pounds. And it didn't matter what Bitcoin's price was. And I was like, Visa can't do that. Western Union can't do that. And it's not because I'm like a particular genius. Like, this thing is a big deal.
How does the Forex work? I'm just curious, in a bigger picture situation where you have, more customers, you're a grown-up business, and someone's transferring, dollars from LA to, euros in Rome. How do you know you're going to get the same Forex that you would get, over the London exchange.
So Forex is really inefficiently priced. Like the rates come out once a morning, like I'm reading the paper or something. Think of a transaction.
But we all know them, right? I want the same Forex that I read in the paper.
And you'll get it. You'll get it. Here's how to think about it from a very high level. If you think about the payment from my Chase account received instantly into a buddy's Barclays account, there's 3 legs of that transaction. One is a BTC USD buy. There's money debited from my Chase account and converted into Bitcoin. That's dollars turned to Bitcoin. I'm buying Bitcoin, not knowingly as a consumer, but I'm trying to make a payment, and so we're converting BTC USD buy order. Okay, that's one leg. The second leg is a Lightning Network payment. There's no exchange. That's just BTC going from Chicago to London. And then the third leg is a GBP BTC sell, because I'm going from, or BTC, I'm going from Bitcoin to British pounds. And so that's just it's just like what Coinbase does. Coinbase buys and sells Bitcoin all day. So do we. It's the same thing. And when you net out those transactions, if markets are efficient, I'll tell you what, if there's a problem with that rate compared to the normal Forex rate, then some prop firm is going to just arb that until it's not. I mean, what are we talking about? Well, what if the banana to my left's $1 and the banana to my right's $10? I don't know. Make $9 all day till it's not. I don't know, right? But I don't know. I'm not a genius.
Now, one thing you mentioned, Coinbase and a lot of the other crypto-related businesses that seemingly should be okay, no matter what the price of the asset is, are having problems. Mm-hmm. Maybe it's a business-specific issue with Coinbase. They overhired and they have to then turn people away. But in general, Strike should not be affected by the price. Doesn't matter to you if Bitcoin is $1 million or $10.
That's exactly right. That was the other reason I started the company. It's a payments business. Bitcoin, we just use it as a value transfer protocol to do stuff other people in the industry can't do. But we're not correlated to the price of the asset, right? For example, working with really large fast food retailers, those are our customers. Working with NCR to enable the receiving of dollars over this thing. So in theory, a Cash App user, it could go dollars from Cash App to Bitcoin on Lightning straight into a large retailer like a Wendy's, for example. We empower that. Wendy's doesn't care about the price of the thing. They're getting instantly credited dollars without any notion of interchange that is fixed and announced by the Fed or by a bank consortium. So they don't have a tab open of what's the price of Bitcoin? They don't do that, right? They don't care. It's better payments. So,
and just to editorialize, I think Wendy's is clearly the best fast food, at least of the 3 major chains. Do we all agree it's the highest quality?
Sir, this is a Wendy's.
What about competitors? I mean, anyone could do this. Visa, Western Union, Barclays, they could all jump on and use the Lightning Network. That doesn't bother you?
No, the thesis is that the network is going to be better than what we have today. Today we have these kind of old bifurcated, if I walk into Starbucks with Western Union, they're gonna be like, what am I supposed to do with that? And if I try and remit money over Visa to El Salvador, don't really work. You have these highly optimized digital payment networks for non-digital assets. It's very expensive. There's a lot of fixed costs. It's very slow. And I think that this one open global singular network all these other services will consolidate on it. So it's implied that Cash App comes on. What's the use of a network if I'm the only guy on there? It's a pretty lonely network, Matt. According to the definition of a network, I don't even think it'd be called a network. So it's implied that, one day before I die, my wire transfer from Chase to Barclays should be over a more efficient payment rail. And so I think what we all want is open free market competition where anyone it's an open standard to transfer value. And it's very simple. People think Visa's easier. They don't have to touch Bitcoin. Visa's not easier. It's slinging around a bunch of credit liabilities all over the place. So it's not easy. And you go online, read the instructions, you implement it, and you can build the experience you want. And that's where you get inherent free market competition, which inherently suppresses pricing, and you really get to the bottom of things like financial inclusion problems. If JP Morgan Chase can't bank someone because the only way they make revenue on you is if you're credit worthy. But now if the value transfer standard's open, people could build services for whoever they want. And if there's a real market opportunity, the market's going to find that, right? So I think it's just a better world, and the more people that come on, the better. And for a business like mine, we benefit from the network effects of that. Jeff Bezos, people are like, what happens when Amazon turns it on? I don't know, probably worth 10 times more overnight, right?
You mentioned El Salvador, by the way. I don't know if it's the perfect petri dish, but it certainly is an experiment. How do you think that's working out? Because Strike is active there and very widely used, as are other payment apps.
Yeah, I think it's working well. I don't know. Like, since when was like changing the world and like the trajectory of your country a homework assignment that was due in like 3 days? Like, come on. I think it's working well. Well,
it just happens to coincide with the drop of Bitcoin by like 60%. So
yeah, I mean,
that's why it gets a lot of attention.
I've been through a lot of these bear markets. This is the first one where Bitcoin, through a violent bear market where everyone's freaking out, is outperforming Netflix. So, Matt, everything's dropping. What do you want El Salvador to hold right now instead? Like, right? And like the rising of rates crushes emerging markets. So I don't know. Pick your poison. Like, the system's broken. I don't know what to tell you. Right?
But you can see how people are able to use Strike in places like El Salvador, places like Argentina, where you're active.
Yeah. So I mean, like, we're the acquirer for Domino's, for example, in El Salvador. They're receiving payments, instant cash finality from any interoperable service. You want to use the government wallet, you want to use the wallet your cousin made in your basement. So it's like dollar to dollar using this open network. These two counterparties, we don't sign MSAs with them. I don't have to check their creditworthiness or their balance sheet. We don't need SBF to see if anyone's like unaccredited, right? Like, it's just cash final, bearer instrument. And so yeah, for consumers to Domino's, for U.S. citizens remitting money home. And it's really cool too. I mean, you could remit $1 instantly and for free. So you're talking about a lot of low income folks where, sure, TransferWise fees aren't that bad if you're remitting $100,000. If you're remitting $10, it's 50%, right?
Yeah, by the way, how does Strike then make money? I mean, if I'm able to send $1 for free, how much do you get of it?
Yeah, so we don't actually think of ourselves as like a competitive crypto app. We think we're providing a premium, like, banking-like experience for consumers, where we give you a Visa card, we make money on that, right? We offer the same suite of products. We're interoperable with the card network. You can make ACH transfers, but then we also give you this Lightning Network thing, and we give you yield savings accounts, like how do banks monetize consumers? It's the same thing. And then on the acquiring side, it's the same thing. My counter positioning, like, for example, a card network's rack rate is probably 100 basis points. It's a near 100% cash flow positive business for me. So I could charge a big retailer 5 basis points. That's all cash flow positive, right? And so I'm just doing the same financial services, just better. That's the innovation. It's not rocket science. It's just better pricing, better experience, so it's pretty straightforward.
I want to ask a little bit about the crypto universe in general. As you said, you've been in since your late teens. You've seen a lot of bear markets. It's so weird to hear someone who's 28 say that, because I normally talk to 70-year-olds who say that, and they're talking about the market. What do you think about this crypto winter? I mean, for me, it's insane. I bought my first Bitcoin at $600 also to see that it's still worth $20,000. But obviously, for someone who got in at 40, 50, 60, it's painful.
I don't know. Like, the fundamentals of Bitcoin and any viable investment thesis hasn't changed. And to be clear, I don't know, if this is a hot take in this room, but I'm Bitcoin. I don't, you don't want me to get going on everything else. So.
Oh, but I do.
Oh, we will. All right. So I think Bitcoin fundamentals haven't changed. The correlation to risk assets is interesting. We don't have enough time to expand on that, but I do think, like post 2008, what you saw is assets with any relative fixed quantity, or just you're implying non-direct relationship to interest rates, start to rally on the back half of recessions and macro environments like this. So I think it's going to be really interesting to see if Bitcoin rallies when others don't in like 6 to 12 months. But right now, it's risk off of everything. Like, everyone's scared. Even the T-bond market, like, everything's trading terribly.
But the biggest criticism of Bitcoin, other than the fact that non-believers say it has no intrinsic value, is that it uses so much energy to mine. And I actually know your take on this already, so maybe we don't get into it. But one of the things we talk about on our crypto show a lot is proof of work versus proof of stake. We have people come on like Joe Lubin who really defend the idea of proof of stake and saying that it's going to be even more secure. Yeah. I know he does. But what's your take? I mean, Ether is a big challenger.
Disclose that to the SEC. No, it's not. So first of all, using energy is not a bad thing, Matt. Like, engineering and the use of energy is implied in like the growth of humanity. You know what else uses a lot of energy? An airplane. So I tell you what, you don't like energy. Next time you and the wife go to Europe, you take a kayak, I'll fly United. Next time you want to save and grow your family's wealth, you use the dollar, I'll use Bitcoin. Next time you wash your clothes, you hand scrape your kid's stain out of the white t-shirt, I'll use a washing machine. Like, since when was using energy a bad thing? I mean, come on, like, it's absolutely asinine and ridiculous. And as far as, it's just ridiculous, seriously. It's like, no one was like, oh, this airplane uses too much energy.
But we're
it's
trying
like,
to use
I
less.
want to travel without
when
dying.
Greta comes here, she takes a sailboat. So
yeah,
the idea
didn't she get like deathly sick or something?
She was not a good experience
Poor
for her.
girl, poor girl.
But a small carbon footprint.
No.
You must care. The kids care about their carbon footprint.
And even
right?
the carbon footprint, I mean, it like incentivize, it's the best use of energy. You know, like what an airplane can't do or your washing machine, like make use of excess energy of a waterfall. So it helps stabilize the grid. Like guys flying airplanes aren't stabilizing the grid. So it's just such an asinine, ridiculous, uninformed, uneducated opinion.
Those are the kind of questions I ask.
Sorry. No, proof of stake, like, first of all, if you want an asset to have a commodity premium, which, you know this room knows what that is, creating money can't be free. Like, guys, what are we talking about? Like, the fact that if a lot of people want to create Bitcoin, it becomes more difficult is why the thing works. Have you lost your mind? Creating money cannot be free. And so, like, what do you mean it's just a stake in the network? So someone like BlackRock just buys stakes in the network? It's absolutely ridiculous. And then you also have to account for things like the laws of physics, which proof of work does. I mean, I think what Michael Saylor calls Bitcoin property and everything else not. I'm not going to comment on what the SEC should do or anything, but I think the real direct messaging there is your relationship with Bitcoin's not a liability, okay? Your relationship with Bitcoin is not a proxy to some foundation, some team, some corporate structure, some development decision. In fact, the founder of Bitcoin, he, she, or they, might be fucking dead. And it's working really well, Matt. That's what Saylor means when it's a property. There's no liability relationship. Like stable coins, there's a liability there. It doesn't mean stable coins are bad. Matt, I own a security. It's called strike stock. Securities aren't bad. Building liability relationships, like Tesla stock's not bad, but there's a liability there with Elon and the company and their roadmap and their cash balance, right? And so like proof of stake, your relationship with that asset's a liability. A stable coin, your relationship with that's a liability. In theory, what you want is a monetary asset where there are no liability relationships. That's the whole point of the thing. That's what proof of work solved that. It was like an amazing innovation. Proof of stake, if proof of work is like, we finally got an airplane to fly, so this is a quote of a friend of mine, proof of stake is like, we know how to make it cheaper, faster, and less carbon efficient just by not flying. It's like, well, like that's not like a competitor. That's just a totally different product. So sorry, I got a little animated. That's
good. But we're on internationally broadcast television.
Sorry.
Let's watch the language. I want to finally ask about, you're not going to tell the SEC what to do, but obviously payments is a business that is highly influenced and affected by regulation, especially after the Durbin Amendment and then the Fed put a cap on the amount of transaction fees. What can be done about that? Because you don't have the lobbying power of a Walmart or a Visa, you know.
Yeah, but you might. Here's what I mean by that. So for those that don't know, Matt's alluding to post-2008, the Dodd-Frank reform, where the government was like, this is ridiculous. Like the counterparty risk that a lot of these central banking actors pose to the economy is too big. Oh, whether they're right or wrong, we could have a whiskey over that, but that was how they felt. Then the Durbin Amendment took debit card interchange away from banks. They're like, this is ridiculous. You're charging 3% to move a balance from Chase to Bank of America. There's no credit in that. There's no like cost in that. That's not 3%, and like, why are you setting that? Durbin took it away from them. What ended up happening then is someone like Bank of America goes, well, I can't monetize mortgage lending anymore post-2008. That blew up, didn't it? now I can't monetize my checking accounts. So when did we start seeing overdrafts, non-free checking, and a push to consumer credit, which is a US phenomena because of this environment? There's no credit card market in Europe. It was then. It was when Bank of America said, listen, the federal government took all my revenue models away. The only way I can really make money is credit cards. And then you see businesses like Chime. These are like Durbin Amendment arbitrages, which it's just a checking account and debit card that routes under the exemption of $10 billion worth of assets, right? And so what I think in my messaging to the Durbin office, I had the pleasure of speaking with them, is kind of like put the guns down. Like federal overreach, what we really want is an open, true, fair marketplace. We want an open value transfer protocol where Square and Bank of America and Chime can all compete on getting money to Wendy's fairly. And that's it. And so when you say Walmart and Bank of America is not on your side, maybe they are. That's the power of an open network. And I think if you want true price suppression and you want true open market competition, if you were to rebuild Visa, you would do it just like the Lightning Network. All the banks would be independent nodes that are on a distributed payment rail, and everyone's open to compete on how to sling the value between each other. And the value has to be property. There can't be a liability in there. Like, what if someone seizes the stable coins in the bank? What if someone on the foundation of the founding team of the token goes through a divorce or something? It's like independent of any liability, and that's how it's cash final value escrow, and let the free market compete for experiences on the acquiring and the issuing side, or the remitting side, the global payment side. That's my take. And I told Durbin, I don't know if federal overreach is going to solve this. I think a free open market like Lightning may be the most American thing we got at solving this problem.
Jack Mallers, great talking to you. Thanks so much for joining us. CEO of Strike.
Thanks, buddy.
Welcome to the stage, Bloomberg's Alex Wenham.
Hello, good afternoon, everyone. Pleasure to see lots of familiar and not so familiar faces here. Great to meet you all. So my name's Alex. I'm responsible for the crypto product and digital asset strategy at Bloomberg. And the group and the team are really laser focused on helping our traditional clients transition to digital asset markets through the familiarity, I would say, of the Bloomberg terminal that I hope many of you love. So what's really important, I think, as Bloomberg perhaps being the OG of data in the room here, to talk about crypto coverage and how we decide that. You might be surprised to know that we've had Bitcoin on the terminal since 2013. After that, we had the top 10 by market cap in 2018. However, coming into this role in mid-2021, we definitely had one challenge, and that challenge was the intense pace of innovation within crypto. With so many more assets out there, with a client base that's extremely interested in those assets, deciding how to cover those assets in an efficient way was a huge part of the first part of our strategy. And that's really what I want to start talking about. You know, the very top of this pyramid is really concerned with crypto. And what we're focused on is what I would define as the top 50. And it's not by market cap, it's not by liquidity. There's a couple of measures that we use, which we'll get into a little bit later. One other part, that middle area of the pyramid, which is incredibly important to us, is the vast majority of the ways that our more traditional clients get exposure to crypto. And that really is through the myriad of different traditional securities out there that give exposure to crypto. Your ETFs, your futures, even your fixed income instruments where the use of proceeds are directed into buying Bitcoin. And we probably know what bond that is. The bottom, where we're really not focused in at the moment, though looking at really closely, is what I would define as the 10,000 other cryptocurrencies out there, a lot of the initial coin offerings that happen from time to time, and how this tokenization of real-world asset theme is starting to permeate through markets. One thing we're really focused on is the fixed income piece, but we're not oblivious to what's going on in real estate and other hard assets. But that, again, I think is a super nascent theme that we're focused on, but it's something that's probably out of scope for the short term, at least from a digital asset strategy. So at Bloomberg, we like data. So I think it's important to define how do we select our top 50 assets. And again, going back to the importance and this pure innovation in the space, it was really important to have a process through which we select crypto assets. One bad thing is perhaps coming in as a product manager is having a laundry list of things you need to do. And one of the classic kind of laundry lists we had was 350,000 customers asking for coverage in crypto. So everything from the ones that we really didn't have that were obvious, like Solana, to ones that perhaps some of our customers had made from with friends in the back of a kind of back of a garage or something. So we really had to create a process by which we start to define, and I stress we're defining, but I think it's going to change over time, what defines institutional crypto. And this is really what this data-driven process was around. So our clients all have fiduciary duties to their customers, so we start with custody. So we maintain an internal database of what I would say is 10% of all the cryptos out there, call it the top 1,000 by market cap. We then look at how many of those thousands have, how many of those cryptocurrencies have actual institutional custody support. When we first did this analysis, there was around 200 assets that had that. I think that list is growing every month. But that's kind of the first part of this process, going from 1,000 to 200, because it is the assets that have institutional custody coverage. The next part is, where do those assets trade? Now there's 550, someone says 630, I think in a previous panel. There's a lot of exchanges out there. And just like crypto assets, they're not all created equal. So we do use a ranking process by which to define high quality exchanges to differentiate from some that are perhaps not so high quality. So the next part of our process is really these assets that have institutional custody need to trade on at least 2 vetted exchanges, high quality exchanges. After that, we released, I think, go back to something that's probably quite common and simple, but market cap based on circulating supply, which if any of you are crypto data geeks, circulating supply isn't always so easy to get, but that's an important part of it. And then what I would define as a liquidity metric, which is really the consistency of turnover. Now this is what we do right now, and that creates our top 50 through a ranking process. But I 100% believe that this will evolve over time, because crypto is unique. When people talk about reference data and fixed income, sure, the issuer, the coupon, these obvious things. Reference data in crypto, cool, tokenomics of that situation, of that crypto, the consensus mechanism, but also how many people are in your Discord, how many people are in your Twitter followers. A whole lot of new, unique information that we'll put into this process as we evolve what is institutional crypto. So what do we do on the terminal? So CRYP is our first kind of solution where clients will go. And really what it tries to show clients is what is going on with the top 15 by cryptos by market cap, taking out stable coins. The next question is, if this is what's happening with crypto, we try to help our clients answer the question of why. So we bring in news content from our amazing news team who you've spoken to and heard from today, as well as a lot of news coverage that we have from our Bloomberg intelligence team that you'll also hear from today, which is really our internal research group. And then also a ton of third-party curated research from the street, which was a really good view of both sides of the equation. Other things we're focused on is, once we talk about what's happening in large markets of crypto, that's only 15 from our 50. And we talked a little bit about also these traditional securities, the ETFs, the bonds, a whole lot of other traditional securities that give exposure to crypto. So digital asset search, DAS, is really our next step of that strategy, which is making all this data discoverable. It's great that we onboard quality data to the terminal, but if you can't find it, then it's kind of useless for everyone. So DAS is really that next one-stop shop for all of our crypto content on the terminal. Now, again, you've heard from a lot of our news team today in moderating some of these panels, and they create some amazing content. What we try to ensure is this familiarity of approach on the Bloomberg terminal. So if you're used to equities and going IBM US Equity CN to find curated news on IBM, you can do the same thing on Bitcoin, the same thing on Ethereum, on Solana, of any of our coverage. Top crypto, you might go to top ESG, you might go to top FX to find top curated news on those markets. That's the same thing you can do with crypto. Top crypto is our equivalent to that. Of course, we talked a little bit about social media, and our social media coverage through SOCI is a way that we try to bring in all those quality tweets, and how you define quality, happy to debate with you afterwards. But having a definition of what is a social media sentiment from this market is also very important. I've only got a few minutes to speak today, but I want to appreciate and thank you very much for your attention. If you're interested in anything that we do on the Bloomberg terminal, a lot of my colleagues are here today, happy to walk through our data-driven process or what we do in greater detail. But thank you very much for your attention, and I'll hand over to the next.
welcome to the stage Tezos co-founder Kathleen Brightman, eToro US CEO Lule Demmissie, and One River Asset Management's founder, CEO and CIO Eric Peters, with Bloomberg's Mike McGlone.
Well, thank you, Charlie Pellet. I love seeing him in the office. Charlie, one thing about Charlie, he'll find every little way to save money on rewards and everything you ever want to get. He always tells them about these things. But thank you for joining our panel on the macro in cryptos. It's my favorite space because a lot of times I don't understand the technology. And I think we're going to start with a slide. If that doesn't pop up, we'll just start right into the Q&A. Okay, this was a slide that we took, I guess it was a poll. And the current downdraft in BTC, Bitcoin, and other digital assets will wet the industry. So test the hodlers, I guess is kind of obvious. But I want to lead that into my first question for the group. And the one thing I learned in Bloomberg Intelligence is we never talk about what the market did. Our job as a dicey operation is trying to predict headlines and see where markets are going. So a year from now, Lule, we'll start with you. Where do you right now we're seeing a classic bust. We had a good boom, and typically a bust is the best foundation for markets long term. We've all seen some of that. Eric, you might have seen it more than I have. So let's start with you. What do you think the main narrative we'll be talking about in this space, macro, next year, this time?
So I think there are two if-then statements that will determine that outlook. So one is the if-then statement of where regulation lands, right? Does it figure out how to do an elegant approach to figuring out how to create leveling the playing field, or does it end up having sort of a chilling effect on new dollars coming in and innovation coming in? So that's one if-then statement. If it has an elegant approach that figures out how to speak both sides of the mouth, if you will, to make sure that we weed out the things that were not structurally right about the space, but also figure out how to foundationally create more innovation, then I think a year from now we will be in a good, as you said, what busts often do, which is a reinvention, right? A reinvention and a reinvigoration. So that's one. The second one is, the last time, I'm from the perspective of the holders, right? So eToro is an investment platform in which regular retail investors get to have access to stocks, to crypto, and in the future other things. And we believe foundationally that individuals shouldn't be left out of the ownership equation, if you will. So from that lens, the other thing for me to look at is what happens to the resiliency and the stick-to-itiveness of an investor, of a holder. In 08, we saw it had some scar tissue that it left, right? A lot of the holders, especially the millennial generation, felt a little bit nervous, and it was really this latest round that sort of brought them out of the woodworks. So I think the two things will be, will the holders have learned from from the resiliency of the 08 experience? And then the second one is, where does regulation sit? Again, if the holders have learned that resiliency, I also think a year from now we're in a better place. We see at eToro, for example, that most of our customers actually said, I'm holding, right? And so that's going to be an interesting perspective to see if it lasts a year from now.
Kathleen?
Good question. I think Lule has probably a better perspective on this as someone who owns an exchange or operates an exchange. I think what's a little bit different about this downturn for cryptocurrency markets as opposed to before is that obviously there was loose monetary policy all throughout the entire history of Bitcoin. And I think that's had obviously quite a bit of impact on the way it's been perceived and the way it's been regarded by the market. So the real question is how does it respond to any sort of contraction, right? And I don't think we know the answer to that, but I do think that's why this time is different. If it is different, that's probably going to be the case.
Eric, you can finish us off until he.
I agree with that. I won't go into regulation deeply, just because I think we'll get through the regulation. I think we've gotten the attention of regulators at this stage, and so and I think we've gotten the attention of the financial industry, and they see value in blockchain technology. And so I think a big part of thinking about what world looks like in a year is thinking about what what are some of the new innovations that come after this cycle's over? Because I think this cycle's over, and I think it ended due to monetary policy. My opinion is that that we're in a period, probably a decade long, of material devaluation of the dollar versus hard assets. But I think that will apply to all major currencies. So it's not just a dollar play. It's I think we're in a period of monetary debasement as global economies reset their economies relative to the levels of debt that they have on. So once this monetary tightening cycle gives way, and markets are pricing that to start early next year. I think if it happens sooner, I think Bitcoin and a lot of these assets will start rallying in advance of that. But I think the really interesting things that we'll be talking about in the next year are some of the new innovations that are coming built on blockchain technology, as opposed to just what's the price of Bitcoin. I think it'll be higher, but I think the innovation cycle coming is going to be very material.
Well, two key things there. Shaw, if you get a chance, can you show chart 4? The key lesson I learned being a former pit trader is don't underestimate innovation. Poof, that business is gone. It's all electronic. But you touched on dollar debasement versus hard asset. And if we can show that chart, I can talk on it. The key thing I want to piggyback on you and then go back to this group is what you see in this chart is that's crypto dollars as a percentage of total crypto assets. Almost 20% now. And it's not so much that, it's the trend. And it's one thing I like to point out, the most widely traded cryptos are the dollar, through tokens, which means Ethereum. And so when you say hard assets, when people say the dollar, and I like to point, well, if you show the long-term trend of the dollar, it always goes up versus other currencies. So where does that fall into play? Let's go with you and go back around where these aren't really, are they cryptocurrencies? Are they crypto assets? And the key question I like to ask is, what stops Bitcoin, for one, and the proliferation of crypto dollars from continuing to do what they've been doing? And that is absorbing other assets, like from equities and things. And like you mentioned, hard assets, like how about the dollar versus other currencies? And is Bitcoin going to be part of that space in the future?
A lot there. I would say, look, I think Bitcoin is here to stay. A number of these assets are here to stay. Most of them are not. So there'll be an awful lot of innovation, and which just by definition means most things will fail. I think when at least when I'm talking about monetary debasement, I'm talking about this an effort to create more dollars relative to the real economy, and that helps erode away the debts that we've accumulated over the last 30 years. So I think that process is a long-term process that is here to stay. So assets that are finite in nature should appreciate relative to dollars that are more plentiful over that period of time. So Bitcoin's one of them. Real estate. And so we've seen various assets increase in value, when priced in dollars. And so I think that that will continue. What the interesting thing, though, and you touched on it, was digital dollars. So I think that we are going to see all assets become tokenized, including currencies, the dominant currencies. And I don't think that they'll all necessarily be central bank digital currencies, but I think the dollar, in a world where everything becomes tokenized, the dollar is a major winner relative to other global currencies.
Well, that's what that slide's been showing. What stops that? Anything you want to add to that, Lule or Kathleen? Or?
I mean, I think, first of all, this is, it's a multifaceted issue. So I think that the one thread I would say is, one, I agree that the dollar wins because, by definition, cryptocurrencies are an innovation on top of something else sometimes. And so therefore, the dollar becomes the highway on which a lot of other currencies get built on. So I do think it wins in that sense. It becomes the choice of highway, if you will. But I do also think that there's an element of, when you think of currency, about what happens in a global economy, right? So when you're looking at countries where their local currency is not as trustworthy, regardless of what just happened happened in the valuation shifts in crypto today, it doesn't change the fact that in code we trust is still probably going to be more valuable to a lot of countries because they don't trust their own central governments, right, to be able to manage their monetary policies. And I think that that is actually going to get more and further hardened. And when that happens, it becomes that much more plausible to think of cryptocurrencies are here to stay for sure, right? Yeah. And not just potentially Bitcoin for that matter. So I think there's two factors to it. One, yes, I do think the dollar wins relative to everything else because it becomes the choice highway. But two, I think that these coins solve for other macro global currency issues.
Any thoughts on that one, Kathleen? Or
I mean, I hate to agree so much with my fellow panelists, but
we need to disagree and have some discourse here.
But yeah, I mean, I think if you look at the crypto markets, you can kind of think of them as two ways. One has basically been utility. You've got this censorship-resistant store of value arc that I think is here to stay, and then you've got sort of the more momentum-driven projects, which are kind of slapped together with like Scotch tape and multi-sig contracts that tend to go bust every now and again. So obviously, like the market has been more fixated on the momentum plays, but I think like underneath all this, there's like really a solid amount of utility and technology that does solve a fundamental problem. I think that having some
what's the fundamental problem?
Transferring value between you and someone else across the world without the use of or risk of an intermediary, which is a problem we've been trying to solve for a really long time.
Yeah.
So I tend not to bet against that. But yeah, I mean, I think the idea of programmatic money and the idea of kind of pushing the ball a little bit forward with the technology is the best case scenario for kind of seeing us our way out of this particular bear market in crypto.
So, Shaw, if you can show slide 3, I want to expound on what I do at BI. I'm a kind of an ex-trader, used to have the scars of trying to run money. Is I just say things. You do it, and I really respect that. I've learned my lessons. You get stopped out sometimes. You have real money getting stopped out. So let's expound on what I show you in this chart is there's this performance of cryptos. What I show you is this is just a performance of the Bloomberg Galaxy Crypto Index versus the NASDAQ in a declining volatility environment. And the narrative I've been using for quite a while, trying to quote people like you, is, well, what's your risk in the next 5-10 years for anybody who's running money of being exposed to crypto versus not being exposed to crypto? And Mike keeps saying, well, if you have 100 units invested and you don't have 1 or 2 in crypto and it just keeps doing what you're doing, you could get fired. And 5 years ago, it was the opposite. Is that narrative fit into play with you at all? And maybe we should start with you, Eric, or is that completely off?
Well, we definitely didn't get into it because we thought we were going to get fired if we did it. We just
or they go to another manager.
Maybe it would have the other way around. But no, we entered the market with a large institutional trade in November of 2020. Really driven by the macro backdrop of this monetary debasement theme.
Was there an inflection point that made you make that decision? Because that's a big decision.
Yeah, it was right around the election, and I think it was becoming more and more evident that that the scale of the stimulus was, which we had expected. We had expected whenever the next recession hit that there would be a very large fiscal stimulus that would be married with monetary policy, and so. And that would create this new period of monetary debasement. What we had underestimated was the sheer scale. So U.S. ran 15% budget deficits really 2 years running, and so we were in kind of the middle stage of that coming the election, and so that was an opportune time to enter, and we had So anyway, we could go on for that for a long time, but look, I think
Oh, well, I get it. I appreciate it. Lule?
So I think your question was a 5-year horizon, right?
Well, minimum. I like to think sometimes 1 year is like, well, speculator traders, well, forget it. But minimum 5 years, I would think, it really matters from a true asset manager.
Yeah.
Am I there at all, Eric? Or?
I mean, look, we got out of almost all of those early trades within 9 months.
So that was kind of your beta, though, for the bigger picture.
Yeah, I mean that there was I think it was a very highly convex opportunity. We thought that that most institutional investors didn't really understand how much security had improved in terms of custody underestimate a lot of the things that I think had improved in this space from 2017 on. So in a world where institutional investors were scrambling for convex bets to this monetary debasement theme, there just aren't that many.
Yeah.
And so that's a driver for a trade. But I think, from our perspective, there's a lot more going on here, which is really related to the technology. And so we think that creates a 10+ year tailwind for this asset class. And as that technology gets adopted across the financial system, we think that these assets will, the quality assets, Bitcoin be one of them, Ethereum be one of them, they will appreciate materially.
Lule?
So I think, it's interesting. We have the luxury of having a lot of younger investors on our platform. So the majority of our investors are millennial or younger. And so, as you always know, time is your friend when it comes to investing, right? And so I think there's several things that drive the thesis of most of our customers. We don't necessarily manage ourselves, we're a self-directed investing shop. And one of them, obviously, is time horizon. But the other two are really about a real appreciation because of the generation that we're dealing with, that there's a transformative nature here that's just beyond just their portfolio, right? That this is not just about their holdings and their portfolio, but taking part in a transformative thing that they believe in. So that's one. There's like a belief structure that's not just about the valuation of the asset.
So you're telling me millennials don't buy gold?
No, I'm not saying they're not buying gold, but I would bet that they're not buying gold at the same rate that they're buying crypto assets.
There we go.
And the third piece of it is one of diversification, right? So a lot of them, they're not just buying crypto, they're also, because of the proliferation of fractional shares, are able to access equities at a level that they weren't able to do before. So there is also an appreciation of a diversification element of it as well that is in their calculus. But to me, sort of like, to look at this asset class only through the lens of, and no disrespect to my friend here, through an asset manager's lens is to miss the true big picture of what I think is going to be the power of the transformation of this asset class.
I have a quick question. Do you see millennials buying gold?
We don't have gold on our platform,
I know, but when you look at your client base.
I don't have that insight, yeah.
How about through a token?
Through a token, yes.
Yeah, there you go.
But they buy all sorts of other things, right? Levered instruments. So they're not singular consumers of one thing or another. And again, I think that's a wise thing that they learned through these 2008 crashes of like diversification matters. But that doesn't necessarily mean you're a fundamental investor only through the lens of investing, but through the lens of other things that factor. You see that with ESGs, right? This factor of like other things that influence my choices around investing that are not just about the thesis of the balance sheet and the income statement.
Well, transition, you're right away, Kathleen, but the lesson you learn early on in trading, it's like the first day in a casino, it's best to lose, because that means for an enduring career where you understand mitigation of risk. And hopefully some of the millennials didn't lose too much, but they know when they, as they get to mature, that, okay, I lost a little in cryptos, but look back 30 years from now, it helped me out. Kathleen, it's your turn. And
I graduated from high school in 2008, so like right in the thick of this. And I think it's not so much like you get, you learn that institutions are more fickle and more feeble than you would have thought. I think we also relearned this during the pandemic. Like we really couldn't rely on a lot of the systems that we thought we could. So I think, my generation's pretty scarred.
In a good way. So because you're young. I mean, that's right. You have the diversification of time.
Yeah, but I do think what's interesting about cryptocurrency is it is a cultural movement as much as it is, a way to look at, I guess, digital assets a little bit differently. I tend to agree with Eric's earlier comment that things are going to be like tokenized in some form, and a lot of assets are going to be tokenized in the near future. I think that's really cool and interesting. For me, like I'm not an asset manager, and I don't run an exchange. I work on a project, right? And Tezos is a cryptocurrency. So what's been interesting to watch over the last few weeks is that there's been all this contagion with 3 Hours Capital, Luna, and some of these other folks, which is not just revealed kind of the way that the sort of last big crypto bull run was conceived in the way it was managed, but also the way people manage their treasury. So a lot of people had Luna in their treasury thinking it was a sure bet, for example. And so it's been an interesting, I guess, culling of the market, both from more high macro and then also just on treasury management for these different projects.
So I have 2 questions. I want to start with you, Kathleen, and rope back because I don't want to leave you on the end there. My question is, we're talking about a technology that basically didn't really exist a decade ago. And I want to ask you what you think, what's going to change in the technologies we need to anticipate that might change this space. If, like Eric, you mentioned, we all talk about tokenization. I was at the SALT conference in Bahamas and I asked Anthony Scamuzzi, and he says, nothing stops that. I mean, I came from futures, and futures have really taken over a lot of trading. What is the technology we have to think about and really be concerned about and be aware of for the future that might alter our theses, and we should maybe for opportunities in this space?
Sure. I mean, so Tezos is a cryptocurrency that can upgrade itself, and it usually does so around every 3 to 4 months. Basically, there's a vote, and people add new technology to the platform or to the ecosystem. The thing that we're focused on now as kind of a community is scaling, because I think this doesn't really thrive if it doesn't scale. And we've seen a lot of the sort of crises or like kind of stress tests of the Ethereum network kind of come from like, increased popularity. And this stuff hasn't to date scaled really well in a decentralized fashion. So I think like in order for this stuff to really have teeth and to become more pervasive, you need better, you need better technological progress in the things that, kind of bring it up to the big leagues. And that's to date been like scaling has been a big issue.
Lule, you want to come back on that one, and we'll go back to end it with Eric and back to me, or
however your
let's go for you.
Strikes you.
Any thoughts?
So I think the question was again.
Well, it's trying to anticipate. Our job is to try to predict the next headline, right? That's dicey to do, but we're not journalists, right? And you run the money, and that's what you do. You have to try to predict the headline. So what is the technologies? I mean, tokenization to me is inevitable, just getting through the regulation, right? What is the next big thing to compete with Bitcoin, maybe, or to are we going to stop using credit cards so much because we can use a stable coin and not have to, the merchant doesn't have to pay 2%? What's really going to be the thing we should think about in the next 5 years that you see developing in this space that might really matter from an asset?
Yeah, what's so fascinating about this space, which is why I think even in the kitchen is really hot right now in our space, and I'm still staying. I believe in scar tissue. Scar tissue is a valuable thing in life, and what's so fascinating about this space, and I'm not trying to hedge this answer, is that the use cases are literally like Matrix-like. They are infinitely possible in so many different directions. You want to create UBI, potentially, we have, for instance, a UBI token called Good Dollar, right? You could start solving situations around like maybe the tokenization, maybe this technology could solve for that. You want to solve the transfer of money from the Philippines to here for all of the remittances in a safe way. You can solve for that. Yeah. You want to create a local government interest in a particular zip code in Queens, and you want to figure out how to attract people by using tokenization, you can. I think the use cases are infinite, which is why it's so fascinating. Yeah. Which is also why it's so important. One of our biggest problems in our society is that capital has not been distributed. It still sits in the hands of the few. And what is so fascinating about this space is it has the power to pierce that veil.
Yes.
And one of the reasons I keep on talking and harping about regulation is that it is important, it is super important, that this innovation continues without, again, where the rules are set steady, but that the innovation keeps fostering, because there is no way to create equity in this world without having this kind of innovation have the infinite level of use cases that come for it. Now, to give you like the horse bet of like what's next year, I'm not good at that. But what's so fascinating to me, I know this for sure, this is transformative.
Yeah.
To the likes that we've not seen in history for a long time.
Having moved to Miami, where there's a good South American exposure, the joke is, well, it's the closest city to America. They get melting currencies. Americans, we have, like, Wences Caceres said it. He said, well, in this country, for us, money is like water is to a fish. And that's changing, though. But the rest of the world, I can get exposure to the Dow through my phone or Bitcoin. Eric, I think it's
I think that'll be a really important part of it. So for us, as I mentioned, our entry into the space, at least institutionally, was due to a macro catalyst, and yet it pretty quickly realized a few things. So the first was that it became clear to us that all assets would eventually become tokenized, just because the trading and settlement rails are so superior to the incumbent systems. And so once you kind of have that realization, go, okay, every asset in the world will eventually be tokenized. And we could argue, I'd be curious to hear what your thoughts are in terms of the timing of that. But our view is that even in the next few years, we're going to start seeing that accelerate. But in that world, what does the financial infrastructure look like? And we, as asset managers in this space, there were a number of things that we saw that that either weren't yet built or maybe they were built by people who didn't really understand finance and asset management very well. And then there were just some opportunities that looked like some of the biggest opportunities that I've seen in my career. And so we started building some of that infrastructure. So I think what you'll see, I won't go into all of it, but I think one of the most important things that you'll see, this is something that we're working on, is just taking the technology that first became manifest through DeFi and then applying it to incumbent assets, which aren't yet tokenized but will become tokenized, and doing it in a regulatory compliant way. I think that Jake Clayton, who is our one of our advisors, spoke earlier today about the importance of really not seeking to innovate through just leaving behind regulation, just completely criticizing incumbent regulation, but rather to work with the regulators and say, listen, these technologies actually can help you do your job better. They can help with customer protection. They can help with transparency. They can help with creating a more sound financial system. I mean, when you think about 2008, you think about March 2020, our financial system really kind of broke down. And so I think some of the blockchain technologies applied in the right way across the financial system will provide regulators and all types of financial counterparties with much greater transparency around what their counterparties own, for instance. And so we think that there's some great innovations that are coming. We hopefully will be part of it. I think we will. Yeah. But there'll be others as well.
Well, Eric threw out a question. We want to go there with that. Kathleen, you first. If you're as far as tokenization, I can tee it off. Eric, why don't you just? I'll tee it off a little bit. The most widely traded crypto assets are dollar tokens. Tether's one, USDC is number two. It's gaining because of the other issues, but it's just a fact. A lot of people don't know that. They think it's Bitcoin and Ethereum, but to me, that's the point: is what stops that? And Eric, you want to just refresh that question?
Look, that's a great example of an incumbent asset that has been tokenized. So stablecoin is really the killer app in this space right now. I know there's a lot of focus on other assets, but I would add as well that in a free market, stablecoin could have been denominated and dominated by the euro or the yen or the RMB or anything else, and it's 95% US dollar. So the dollar really wins in this space. But that's just an example of the first asset. I think the next big asset to get tokenized will be the U.S. Treasury market.
Really?
Well,
how about equities?
Sorry, I think that the most important next asset. Okay. I'm not predicting that the Treasury market will get tokenized, but I think if you look at the foundational assets in the financial world, you have the dollar as a global reserve currency, and then you have the most important asset, which are treasuries. And so, and you've already tokenized this, and that's going to be brought into the regulatory system rapidly, I think. And then once you add treasuries to that, then it creates a forcing function across the whole financial system, so that everyone will need to have digital wallet. Every financial institution will have that. It means all their customers will have that, and that facilitates the much wider adoption of digital assets throughout the financial system. And then what will happen is every bank in the world will say, well, we have the infrastructure already. Why wouldn't we tokenize absolutely everything that we have? So I think that's the kind of roughly speaking what the sequencing will look like. And I think that will happen over the next 10 years.
That's a very aggressive timeline, but I mean, we've already seen. I agree. Like, so stablecoins are clearly the foundation of kind of the putting the FI in DeFi. We've got the decentralization because that's the nature of the technology, and then a lot of this has been very recursive and very I've been calling DeFi Ouroboros finance for the last few years because it's all like kind of tokens that exist to be traded on tokens that exist to be traded. There actually hasn't been FI. There's just sort of been like de-gambling or something. But so what's interesting is if you tokenize these assets, and mind you, there's a lot of assets tokenized on the Tezos blockchain. Like that was one of the first big things after it launched was basically tokenizing Thai real estate or real estate in Thailand. They've gone through the sort of rigmarole with the Thai regulators and things like this. But it's great. It opens up a lot of financing opportunities to these people who might not otherwise be able to get these types of investors because you're using a blockchain instead of I guess technology that people are less acquainted with. I don't know. But I suppose to that point, to that end, seeing this marriage between between like a stablecoin financing all the things and tokenizing all the things, it's a pretty clear picture. If you see it.
Yeah, Lule, you any thoughts on that?
When you guys were talking, it's so clear to me that for the U.S., this is like another extension of the U.S. dynastic sort of goals in the globe. Like just, to me, this is why I'm like, this has to be seen as a strategic asset. Like, this is unbelievable.
I think that's what we're getting at with this Children bill. They figured it out. Like, hey, let's not mess this up. It's pretty good for us.
We might mess it up, but
well, hopefully not.
We should. Yeah.
Well, if you can you show my chart 1? I want to take us home with the most important thing a lot of people want from you is, where do you think Bitcoin's going to be in a year? Higher, lower, or unchanged? I just show you a simple chart of, I like to look at Bitcoin just dropped the most below its 100-week moving average ever on July 1st. Like, okay, it's a bull market. Do I want to buy or sell at those levels? I think if I'm thinking to Eric running money, well, maybe I want to scale a little bit of that in. So why don't we just do final words? We have a minute, and whatever thoughts on that if you want, and any final words you want to have. Should we? How about we Eric, and we'll finish with Kathleen.
I don't make price estimates. Just well, I do that. I know. The reason is I try to stay objective.
I figured you'd say that, but I had a message.
But what I will say is that I think at the highs there was all sorts of types of behaviors that you see at highs. A lot of euphoria. People very publicly borrowing money to buy Bitcoin and doing it in a loud way. And at the lows, you see lots of things break, and you see tight monetary policy. And we're seeing all those right now. We're not done hiking rates. I think Bitcoin will bottom before we complete the hiking cycle, and then I think we'll have a powerful up move after that. So we're in that zone where this is the accumulation zone. It doesn't, and
that sounds bullish to me.
I think you're in terms of the market cadence, you're in that period of time where you're not supposed to be selling here, you're supposed to be buying.
So we're up to time. So Lule, and then Kathleen, let you take us home.
I mean, ditto for me as well, in the sense that as sure as there's a summer, there's a winter, right? And as sure as there's a winter, there's a spring. And so I think a lot of times the vitriol of fear can keep, again, like my business is making sure individuals, not institutions, but individuals don't miss opportunities for wealth accumulation. So when downturns happen, it's just as important not to be scared off as when bubbles exist.
Don't be getting stopped out on the lows.
Yep.
Yeah, lesson I learned the hard way. Kathleen, take us home.
I think Bitcoin will be around in a year. I just don't know if we'll be in such a nice venue.
Wow, that was quick. Well, thank you, everyone. Appreciate us and appreciate my panel. Thank you very much.
Thank you.
Welcome to the stage, Vayner 3 President Avery Akkineni, Binance Executive Vice President and Head of Charity Helen, and digital artist, people pleaser, with Bloomberg's Stacey Marie Ishmael.
All right. Thank you so much. Hello, everybody. Thank you to the folks who set the stage for this panel by talking about the challenging macro environment. Is that what I was hearing correctly? So when we were first thinking about this panel, NFT prices were higher, is what I would say. And I wanted to start by reading from the statement that the CEO of OpenSea put out when they had to let go 20% of their team just a few days ago. And there's one thing in here that I want to pull out because I think it's very relevant to what we're all going to talk about, and it's this. During this winter, I expect we'll see an explosion in innovation and utility across NFTs. With the hard but important changes that we made today, we're in an even better position to capture what will soon become the largest market on the planet. Now is our time to build. Winter is our time to build. I highlighted the words, innovation and utility, because I feel like there's certainly a perception, perhaps a misperception, depends on your perspective, that all NFTs are overvalued pictures of apes, or things that celebrities will shill on their Instagrams and then deny later. And what we're hoping to achieve with this panel is more of a discussion around the real potential possibility of what we like to say the underlying technology, but also actual use cases. And so I want to start with you, Helen. One of the perhaps stranger things to happen in the first couple of days after Russia invaded Ukraine, I bet you weren't expecting that segue, after Russia invaded Ukraine was this outpouring of crypto philanthropy that ultimately resulted in several hundreds of millions of dollars being raised to support the state of Ukraine, but also their soldiers and also their populace, to the extent that Ukraine's digital minister was like talking about, hey, we're going to mint and sell our own NFT. And the charitable arm of Binance was one of the entities that was very present in all of those conversations. Can you talk more about what actually crypto philanthropy is, and not just in like the Sam Bankman-Fried way?
Fantastic. Maybe I give you a quick example first. Maybe I ask you a question to start with.
Oh no.
Today, if you want to donate $100 to somebody, let's say in Ukraine or Africa, give me a number. How much do you think out of your $100 will be end in the hand of the beneficiaries?
Depending
in
on
the existing non-crypto system?
Probably 90 of that.
25%.
Okay, that's worse.
We're not even talking about corruption.
Right.
So that's the reality. Why? Because actually sometimes in order to donate 100,000, people have to pay 200,000 to PricewaterhouseCoopers on auditing fee. There's a lot of actually transaction cost is being involved. This is why technology actually add values into this, because crypto fundamentally is transparency and is trackable. Today, 4 years ago when we started Binance Charity, we were doing project in Africa, doing lunches. Out of the $100 we donate, 93% of them turn into the food on children's plate. Mm-hmm. The other 7% are the local costs. Everything is actually transparent. We are the only charity which had zero administration fees. It's not only we are saying it, everything's trackable, transparent. You can all check it on the blockchain. So this is why technology can bring in real values into the society. And talking about in Ukraine, it's exactly the same thing. Today, if a lot of people, if you only want to donate $5, $10, it's not even possible. Nobody even accepts your $5 or $10. One of the things we worked with the United Nations to offer is the refugee crypto card. Offer them a crypto ID, and then they actually they can receive cryptos from even $1. Everything around the world.
I want to ask you about that, because donating $5 in crypto can also cost you $5 in crypto, right? Like there are still significant fees and complexity for a lot of folks associated with these things. What has to change about the ecosystem in order to make what you're describing more of a reality?
Infrastructure and education are the two most important fundamentals. I think when we were doing the project, even in Africa, today we are talking about, in the traditional world, we're talking about financial inclusions for generations. Even we're looking at what actually happened for the third industrial revolution, which is internet-based. The world didn't become a better place. 1% of the population is holding 90% of the global wealth. This is actually why blockchain is so popular, because people believe with the fourth industrial revolution that the financial system is going to change, because we are going to get rid of a lot of more efficiency, and also get rid of a lot of the intermediaries. This is why blockchain is going to play a far more important role in the society to achieve the final free transfer of values. And it is in this whole process, we're talking about currently in the existing old traditional financial infrastructure, people has been excluded because it's too expensive even include them into having even opening banks. But with blockchain and crypto, we're able to do projects to empowering the bottom billion people because it's far more cheaper. We can do remittances. When we were doing project in Africa, we're seeing people using our platform doing remittances because they don't want to pay 15% to Western unions. And then also some of their relatives probably is not even in the capital city of certain African countries. They don't want to use a broker taking for another week to getting the money. With crypto, everything is possible.
Everything is possible, everything is not yet practical. And I want to talk to somebody who spends a lot of time in the practical elements of this space. So People Pleaser, you've had an interesting career. When we were talking in the green room, you said that one of the things you've really done is try to push the boundaries of crypto and art. And in your most recent project, Shibuya, you had a very interesting Medium post where you're basically like, well, most of this is like speculation and none of it makes sense and it's not sustainable long term. However, here are the interesting things. What for you are those actually interesting things in an environment, perhaps less right now, but in an environment where there was so much kind of like speculative activity?
Yeah, I mean, I think it might be naive to sort of hone in on the non-speculative parts, because I think part of the charm of crypto is that it is speculative, right? But yeah, personally, you know, I've felt that the NFT space for the past year and a half at least has been more stagnant on just sort of, you know, speculative assets and focusing on, you know, floor prices. And you know, I feel like Bill Gates got a lot of flack from the NFT community for saying this, but I actually agree with him, which is that it's based on the greater fool's theory currently, right? It's all about who's the next person who's going to buy this NFT, and then the price goes up. But you know, the floor price that you're seeing is not actually what every asset is worth, because once somebody sells, then the floor price goes down. So just because you have the asset doesn't mean that you you know, have actually that much Ethereum in your wallet or value. And so this really got me thinking, you know, why have we created a culture where everyone is so obsessed with this floor price when the wonderful use of blockchain technology can be utilized for much more? And part of the, so Shibuya is kind of like a decentralized Netflix / Kickstarter
So just to translate that in practice, the example that you used in that post was you are creating a story. That story might have 2 arcs. Somebody could choose to back one arc versus another arc by making like decisions on a blockchain by saying, you know, I'm going to buy an NFT that's for door number 1. Somebody else might buy an NFT for door number 2, and then they can like fight it out creatively that way.
Yeah. And so, you know, in this way, I think the community feels like not only are they financially supporting the creation of this IP, but also that they have a say in where the direction is going. It makes it more sort of inclusive and collaborative. And this sort of goes back to last summer where I helped crowdfund the Ethereum documentary by selling a series of NFTs, and then we raised over $2 million in 48 hours. And just like that, the documentary was funded. And if anybody has ever tried to fundraise in the film industry or anything, you would know that it's usually a multi-year-long process. And similar to what Helen was saying, there's all this, you know, paperwork and bank wires and everything that's involved. And so this is a wonderful opportunity that crypto can open up for us. And sort of what I've been more focused on is trying to drive that value back to a lot more creators and using this technology or building a platform to make it accessible to more people, because not everybody knows how to code smart contracts in the blockchain, right? So yeah, I think that this is something that I'm personally more interested in, and I definitely feel like more people will start to see this sort of value as we're headed towards a more bear market and people are focusing on things beyond just speculation.
So one of the polls that we did on Twitter, we asked the question, what would have to change about NFTs to kind of like bring them back? And one of the things that people identified was security features, which is to say like not constantly getting hacked, not having the verified Instagram account of Bored Ape be compromised and then people connect their wallets to it and lose all their NFTs, or otherwise engage in phishing scams. And I raised that because everything that you all are describing is operating in like this almost like a countervailing wind of an environment where like, here's a really interesting idea for philanthropy, here's a really interesting idea for creative fundraising, and then a bunch of people are there like, what if we made your lives really difficult? How are you, and you know, Avery, I'd love to get your kind of perspective on this. Like, what are the kinds of things that you are seeing that is countering those difficulties? Like, you work at Vayner, which is just rebranded. You're now Vayner 3, as in Web 3. So this is clearly something that you are fully embracing. Like, despite these very real and very significant challenges, whether it is speculative frenzy into bear market or fairly legitimate user experience and security concerns, why are you optimistic about it?
Yeah, it's a great question. So about a year and a half ago, we started at Vayner, led by Gary Vaynerchuk. We started to get really into the world of NFTs, both from a collector perspective, launching Gary's project, which is called VFriends, and then launching Vayner NFT, which is a company that I run and just rebranded to Vayner 3. And the reason that we continue to be extremely optimistic and excited about this space is we believe that the consumer blockchain is going to revolutionize not just the next iteration of the internet, but the next iteration of consumer behavior. We've talked about art, we've talked about philanthropy being two sort of immediate use cases which have propelled the early wave of NFTs. I think gaming and sports and collectibles kind of is included in some of the examples of things that have already hit, like People Pleasers work selling for 7 figures and incredible donations happening through the philanthropic crypto community. But beyond that, there's a lot more that NFTs can be. As humans, we spend a tremendous amount of our time on digital devices and digital screens, and that number is only going up, up, up. But people don't actually own things in their digital experiences. Maybe some of your kids play Roblox and you give them Robux for their birthdays or something like that. So that's or you're into gaming and skins, and those are examples where you can start to pay money for things digitally and for those digital experiences, but it's not interoperable. Like you have your Roblox within your existing, that ecosystem. You can't take it with you to Meta. You can't take it with you to Fortnite. Those are all different experiences. And what we think is that NFTs are really the tip of the spear for the broader Web3 ecosystem. NFTs are something that people can understand immediately. They understand a piece of art. They understand a digital collectible. They understand the concepts of rarity. And that then sort of opens up the broader ecosystem of metaverse and blockchain and crypto, which we think is going to be really fundamental in the next iteration of how consumers use the internet. With that said, in the last 18 months, it's been a lot about speculation and hype and flipping and trading, and there's been a ton of activity in that space that's cooled off tremendously in the past couple of weeks. We actually think that's healthy for the space to sort of take out some of that over-financialization that scares away mainstream consumers, makes them think that crypto is incredibly speculative and risky and they're going to get hacked. Because when you look at the broader ecosystem, even within NFTs, there are, for example, Tezos and for example, what Dapper has built, offer solutions that are not as risky as sort of Ethereum mainnet super expensive NFTs. That's what grabs the headlines, but the reality is that is going to be a tiny fraction of the total user base of how people interact with NFTs in the future.
So, People Pleaser, I want to get back to this idea of art, because art markets are also prone to speculative frenzy of different kinds. How are you finding, both as an artist, but somebody who's working on art funding, the differences between, the traditional fine art market and this sort of Web3 ecosystem in which you're increasingly operating?
Well, I think, first of all, I am all of my background is digital. Even before crypto and NFTs, I was working as a digital artist for various Hollywood post-production films, and so I can't comment too much on the traditional art market because I'm not actually part of that world. But what's interesting is that through NFTs and crypto, like the sort of higher tier auction houses like Sotheby's and Christie's are all now, sort of very interested in this space. And it's created this conversion of digital artists and traditional art, which I think I just think that, in the past, maybe there has been some kind of stigma against digital art where people just don't see it as real art. And now, I think there's sort of more acceptance to it, because at the end of the day, art is subjective and it's all about just expressing yourself through different mediums, right? And so people with digital art just do it on a computer versus in the traditional art market. In terms of the speculation parts, I think that's just always going to be part of something that is inherently subjective. It's very, very hard to,
What makes an ape beautiful?
Exactly, but what I personally find interesting, and this is just a personal passion of mine, is the concept of storytelling, and you can do that through digital art or traditional art. And for example, things like film, you can release it to the world and then have the audience sort of rate it. And then in that case, you can say that it's technically less subjective than something that's being sort of speculated or praised behind closed doors. And that's what I find really interesting about this space.
Helen, one of the things that you said about this, the idea of philanthropy is trying to make it easier than doing it traditionally. When we were reporting on the first sort of wave of crypto donations, there were definitely people who were active in the crypto ecosystem, had no problem figuring out, okay, that's the Ukrainian wallet, we verified it, we're going to send it, it's fine. there were people coming in because they wanted to give money that way. What about the on-ramp, as it were, right? Like, what about the thing that takes somebody from, I've seen an NFT to I want to become an active person in this ecosystem? What about philanthropy have you found can help people consider this asset class differently in the way that, as People Pleaser is describing, it's working for some folks who come at it from a more visual or artistic perspective?
I think on the on-ramp is very much depending on the regulation. Actually, I built the Binance fiat on-ramp globally for 4 years. And then recently also working with the European government, getting our 3 registrations. I wanted to say, actually, I'm finding in Europe, actually, the government, the leaders really understand the impact of actual blockchain. It's all really creating value to the society. So it's actually very welcome for the on-ramp support, for the charity. But even going back to the first question you just asked Emily, I think because I also built the Binance NFT platform, I can tell you how the traditional model and how the current model. I think in terms of fundraising, the distribution of profit is very different. Traditionally, if I'm an artist, I want to sell my art, I need to find an art gallery committing 50% of my next 10 years earnings, and then make sure they accept me, and then there's a potential maybe I becoming to be known. So that's actually a very difficult journey. I mean, the probability of successful is also very, very small. But today with NFT is very different. For example, in Binance, when we build a centralized platform, we only charge 1% of the fee as a platform. Everybody, you can exhibit art, in there. And actually, it's not Binance determining the price of your art. It's actually the market drives of the art. We've got Latin American artists. We've got somebody like a 20-year-old. He was struggling to feed himself like the street artist. And then his art went to our platform at the beginning, $100, and then $1,000 and $10,000. He actually earned a lot of money. You know what happened with these young people? When he earned money, he actually didn't go to buy a car. He didn't go to buy any house. He actually set up a local school in Latin America. He wanted to teach more kids actually to learn how to use NFT because he realized how NFT changed his life. So in my opinion, this is lowering the barrier for artists entering into the world, and also it's going to benefit the people who appreciate art. This is a technological renaissance. So the whole fundraising actually really is completely different distribution model.
This is an interesting perspective on like the inherent altruism of crypto, which is perhaps not supported by some of the other conversations we've had on the stage today. But I do find that, and Avery, I want to ask you this because like the history of Vayner is really about community, right? So like when Gary Vaynerchuk was like wine, and then he had a media agency and was doing community management, like whatever the sort of the platform through which he's expressing his various ideas, there's always been this idea of an ecosystem, a community, a sense of like solidarity for a particular in-group. What about that are you seeing or is infusing, as it were, like Vayner 3? Because what I'm hearing from both Helen and People Pleaser is this idea of doing something or participating in something bigger than you, whatever the financial incentives might be.
That's a very astute observation that community has been critical to Vayner's journey over the last 12 years of having the VaynerX company. And I think that what you're also getting at is cultural relevance. It's like where people are actually paying attention is where we've structured a lot of our business opportunity. And certainly, without a doubt, there's a community around sort of crypto traders, and there's obviously varying levels of savviness within there. There's also a community around NFT collectors, people who collect NFTs, of course, some for sort of trading and that hobbyist activity, some because they're passionate around certain groups of artists or certain groups of intellectual property owners, whether we're talking about Nickelodeon or we're talking about MLB or we're talking about Gary V's VFriends. There are communities around each of these programs. And what I think is different this time around versus what we saw in Web 2, which was the fostering of a community on social media and enabling people to communicate globally across the world with someone they may have never met, having a direct one-to-one communication with a brand or a celebrity that they like, or an athlete. This time, when you participate in this NFT ecosystem, you actually have aligned incentives. back to the example that Helen was just giving for that Latin American artist. If that Latin American artist had, had a group of collectors, they would probably interact with them at different art shows, even if they were very successful. And the first pieces would have sold for 100, then 1,000, then 10,000. But if that first Genesis piece that originally sold for 100 was selling for $1 million, that Latin American artist doesn't benefit from that. And NFTs unlock this ability for collectors and creators to have aligned incentives. And of course, that strengthens the bonds of a community of people who are passionate around a specific subject or hobby. Tokenized hobbyism is going to be something that we increasingly see.
That is very interesting.
Coming up like more and more, whether you're really into a game or you're really into an artist, a group of collectors having a forum to engage and all sort of being in the wave together of benefiting from appreciation or depreciation, as the case may be. I think that this is a really interesting use case for that community to actually have aligned financial incentives in the future.
I actually want to echo that. I think today, at the beginning, you talk about the prices, the fluctuation. I think there are two things. When Binance first started only 5 years ago, actually BTC is only $500. Today, yes, the price has been halved compared with last month, but compared with where 5 years ago, it's still a great investment. You have to have a longer horizon looking at actually the development trend. But there's also even underlying why actually we're in here today. I think that we need to think about the human nature. Human has been searching for a good society since even Aristotle days. But look at the world today. I think you're talking about the prices. I think when we talk about financial recession, it's very easy to quantify. But today, in my personal opinion, we're in a geopolitical recession because of human nature. Whether it's a communist, a socialism or capitalism, they all started with a good intention actually to finding a good model of governance. But what went wrong actually is the human nature went wrong. Because good people, when they started getting power, things started to go wrong. So we are actually in human nature. We are in a year, we have to find a certain way to complement actually us. This is how technology come in. Behind actually blockchain, crypto, even NFT, there's a new mechanism, more transparent, more disciplined, going to actually making the process more transparent, adding more discipline into the governance. This is the fundamental why actually talking about, even though there's a lot of maybe NFT is very speculative, but the fundamental layer is very solid.
I have to say I was not expecting to end this on a Hobbesian note. So I think we shall, yes. I think as a kind of a closing question, this got very philosophical very quickly. But as a closing question, I want to ask each of you, you've come up this space in very different ways, and you have positions that are not necessarily what I would describe as like mainstream in various ways. What is one thing that you consistently confront that is a misunderstanding of the work that you are doing that you would, if you could wave a magic wand, change?
You're looking at me, so I'm going to start. So I think we, in the NFT community, we have this joke, right-click, save as, where people will constantly say, I could just take a screenshot of your Bored Ape or your CryptoPunk, and now I have it, haha. Okay, so one thing that I think is incredibly important as a sort of conceptual shift in the minds of the mainstream is understanding why digital asset ownership matters. So if I had a magic wand, I wish I could instill that in the minds of many.
Are you secretly a copyright lawyer?
Potentially, I couldn't tell you, it's a secret.
Helen?
For me, I still think we're in the year of technology looking for applications. So what is most important? Successful cases. Because that's the best way to bring inspiration, leadership, and confidence into the society. So this is actually how Binance, we position ourselves, trying to actually set up and also to encourage, to nurture more successful cases to really change the landscape of the industry. And this is something I love to see more, actually, to how we can support more successful cases, going forward to change the future, to really creating genuine values to the society.
Well, I think, just touching on the topic of art and speculation and stuff, I think that one of the common, misconceptions is that, well, I think actually one of them is, first of all, that this technology, I feel like artists get a lot of flack for using, NFTs, and then immediately we get attacked for saying, oh, well, this is bad for the environment and things like that. But, I think at the end of the day, there's a saying in crypto that's DYOR, stands for do your own research. And I think that there's a lot of misinformation that's being spread out there, and that you should always sort of, do your own due diligence and look into what are the actual environmental impacts and see what you are comfortable with. And, for example, eating meat is extremely bad for the environment, but nobody's getting attacked for, and I feel like, you would never go to, or if people say an artist sells out because they start selling NFTs, it's because it's more efficient and they're trying to make a living for themselves, right? If you wouldn't go to a flea market to somebody who's selling crafts at an arts fair and say, you're a bad person for, making a living for yourself. So why should it be any different on the digital world? And I hope that that kind of, thinking changes as well.
In a session before this one, Jack Mallory of Strike was saying that, nobody's asking you to hand wash your clothes. Like, why are you saying that energy usage is negative? I think the challenge is lots of people are saying that energy usage is negative, and that, just to your point about eating meat, there's this increasing awareness of, it's like 40 degrees Celsius in London this weekend. So there's this increasing awareness that everything that we're doing, particularly if we're coming at it from something that's supposed to make people's lives better, that has consequences. And, so just kind of as a closing thought, what about NFTs, what about these conversations about the environment and the ecosystems, have to actually change in order to better address these pretty robust criticisms?
Maybe I will start with two things, regulation and education. Those are actually the most important thing. Actually, we really think actually the regulation is actually going to bring more successful fruition for the whole industry. So actually in Binance, particularly since last year, we actively work with regulators around the globe trying to develop the right regulation to ourselves and also to shape the whole society, because that's actually, if we believe in the society, we need to bring the whole penetration rate, going up. So that's very important. And education is very important. I think today there's so much FOMO. A lot of people lost money because of FOMO, because people don't really understand the underlying substance. So it's very important actually to do the right education, particularly with the youth. And this is something we also committed on the charity side, 100 million actually for the global fund, working with various universities to developing schemes, to educate the youth and also for the job creation. I think those two things are very close to our heart.
It is, honestly, I have to say, genuinely interesting that most of the folks on all of the panels today have been like, please regulate me more. It's not something you may have expected coming in today. All right, with that, thank you all. We really appreciate you taking the time. Thank you, everybody.
Thank you.
Please welcome Outblaze founder and CEO and Animoca Brands co-founder and executive chairman, Yat Su, with Bloomberg's Kaylee Lines.
Hey, Yat. Great to speak with you.
I wish you were here in New York with us, but I believe it's 2 a.m, I think, in Hong Kong. So thank you for staying up late or waking up early, whichever one it is. Obviously, we saw a video there of Animoca Brands. You have a huge portfolio, but you were really an early mover in using NFTs in the gaming industry. And a lot of your games, specifically the metaverse ones, focus on the idea of virtual land ownership, the sandbox, the obvious example. How do you see that evolving?
Well, I mean, one of the reasons why we were so drawn to NFTs is because anyone who's a gamer will appreciate the fact that the virtual items that they have inside games is one that they feel they should own already. Most gamers don't realize that actually all the items that they apparently play with and have earned, whether they paid money for it or earned it through gameplay, actually it doesn't belong to them. The terms of service makes it very clear that it belongs to the game company. I bought my first virtual item, I think maybe 30 years ago or so in a multi-user dungeon. I paid $20 for it. And it was one of those interesting experiences where for me, it was as real as anything else. And I think today that is true probably for the 3.2 billion gamers out there. Everyone believes that they ought to own their virtual items. Now, whether they understand it or not is a different matter altogether. But intrinsically, they believe they should own it. And the gamers themselves around their communities believe they should own it too.
Okay, well, when we're talking about ownership, if you own an actual home and you have the deed to that property, there's obvious utility and value in owning a home. It can be, close to your office, close to your child's school. You have a kitchen you can cook in. It's shelter. It protects you from the rain. What gives virtual land value? Why is it intrinsically valuable and digital property rights important by extension?
Well, let me just sort of illustrate another example, and then we can go straight into virtual land and the network effects implied with it. In general, when we think of as a species, when we think about when we purchase something, we don't just purchase something for its pure utility. There is a value in that, of course, but there's a lot that goes into social identity and social statuses as well. So for instance, when you buy a Birkin bag, how much of that sort of Birkin bag in value is the material quality around it? And in fact, 99.9% is entirely virtual in construct.
You just want to be seen with your Birkin bag.
Exactly. The network effect, that's right.
Yeah.
But it's also what other people say about it. It's sort of that feeling of being part of a community as well, of other people who have Birkin bags. Now, real estate functions in much the same way. Why would you want to live in Tribeca versus some place far away in Africa? Technically speaking, that house that you have can be bigger and larger and perhaps, more majestic in another place, another country. But we want to live in New York. Again, it's because of the network effect. It's because of the people around. It's the influence that comes with it. And just in that same way, when people ask you where you're from, they're not asking specifically, or even maybe which district you live in, for instance, where do you live? It's a very common question. It's not that they're necessarily just trying to size you up. They're trying to understand what community you're in as well, right? So, you live in the Peak, or you're that kind of person, or you live in Tribeca, or you live in Brooklyn, right? These are parts of identifying who you are. And we choose to play and live in these places as a way of identifying us. And so people do this in virtual worlds as well. When you say what games you play, for instance, actually you're saying what kind of a gamer you are, what kind of a community you're part of. And virtual land in the sandbox functions exactly the same way. The difference about why virtual land and sandbox has meaning is because you now actually have real ownership. And that's a real big difference because, if you don't actually have ownership, you can't allow for capital formation. You can't also allow for the ability for third-party network effects to take place in a permissionless manner. The fact that I can own a house in the real world, for instance, is the reason why a bank can give me a 20 or 30-year mortgage. Now, for digital assets, that wasn't possible until you have blockchain, where at least, someone can now say, well, I know you own this asset. Whatever that may be worth, I can give you the benefit of that capital formation, whether this generates yield, and therefore I can do a 20 or 30-year forward, or whatever that is that I can construct. And it may not be one-to-one how it is in the physical world, but I can now do that because I have the certainty of ownership.
Okay, so obviously there's the context of gaming, and I know the next panel is going to focus a lot on gaming, and I don't want to eat up too much of what they're going to talk about. But as you talk about kind of the idea of just digital property rights, obviously that goes well beyond the gaming sphere. That is everywhere. And I'm just wondering if you feel that that has developed enough, that there is enough structure around the idea of owning digital property at this point.
Well, I think owning digital property is a relatively novel concept still. So I go to this concept around sort of what do we think is natural to us, as in like natural rights, right? And I think that certainly for gamers, the idea that you should own your sort of game items feels natural to them. And for the communities around them, it feels natural too. So it is essentially an implied right, although technically speaking, because data, which is the construct in which is created and formed, doesn't have a sort of legal construct. It's therefore a terms of service, right? It's basically under contract law, which technically means that they can take away, basically all your data rights just because you signed on a click-through agreement, which we think in and of itself is wrong. And I think this is the main thing that we need people to understand, that data is actually the natural resource of this metaverse of Web3. And data is the valuable commodity in this place. When you think about 20, 30 years ago, when the internet came around, we were able to fairly price commodities in places like China or Vietnam or other places because people knew what the fair value was that commodity was paid for. A farmer in China could charge a fair price of rice, knowing that his rice was now sold for a certain value because the internet told him what the value was. The problem with data is we don't notice. The fact that we're all spending time on Facebook and Instagram, where there's no ticker next to us that says, today, your time earned you $50 or earned Facebook $50. We can maybe make an assumption, but we don't really know. Now, what does your relationship to your platform change when you realize how much money they're actually making from you? And they don't tell you this intentionally because, it's to their benefit. It's a classic kind of arbitrage, except it's a different kind of knowledge arbitrage based on the data and the network effects that it can create. So property rights in data changes this because in the same way that, you can't send someone to slavery, for instance, right? You can't ask someone to work for free for you. And we think of the world, everyone who plays, games, for instance, or everyone who spends time on Facebook, we think of them as working essentially for free because they add to the network effect. After all, if we all stop using Facebook or we all stop playing sort of, Fortnite, for instance, actually the value of the game plummets to zero.
Right, nothing is ever actually free in full free terms, and we've definitely learned that with free trading, for example. We know how that has played out over the course of the meme stock era over the last several years. As we talk about property, of course, it's not just virtual land or physical land, whatever. There's also intellectual property rights, and I know that you have been making some investments as well into things like education and NFTs. How do you tie those two things together?
So education is something that's very dear to us. Part of the reason, and we've seen this with gamer time and gamers as well, it's about value to society. One may argue about Bible. Everyone is paid in society. Reasons we think that's the case of the classic and have with property rights. Now, fungible tokens is that content turns into apps, right? That's based. Serving about that is that using the content, whether it's purchasing it. Imagine that I can buy this like $1,000 a year, $10,000 in your life when a teacher, or he's selling his content. And that's there as well. But it's the biggest content creators charity standpoint. But actually, as a working business, fit them as well.
What else are you excited where you're like, hey, exist, fit here? I mean, what other options are you looking to pursue?
I would say, given the time, one of the
two, maybe.
Yeah. Yeah. The very first one's for children's education. You engage where they have to trade. If you can teach our children, I'll teach them economics. I would teach them anything on this financial systems attitude. So in systems, and create an entire generation to understand about risk. And it will be very different. There'll be more cash rates. But these, will actually change in a significant manner. If you take a look in the Philippines, none of actually understanding system in a game works, for instance, at wallet instead of a credit was financially. Broadly, which is really our human imagination, has now the ability, right, through non-fungible tokens. And everything that is an asset, become assets in the real new services on top. So, whether this is music, thing, all in terms of creative forms of content into assets, this is all open, right? So platforms like Sandbox create the first wave into that. Land ownership is one element of it, but it's content creators that are using Sandbox as a platform to do that, right? Not that different from, I'm basically launching something on Fifth Avenue as a way to sort of launch my services to the world. That's the first part. But eventually this will just mushroom to the rest of to a global phenomenon, we believe.
All right, so you've talked a lot about network effects and kind of these communities, and I want to get to DAOs because this was an actual real moment on one of my shows earlier today. Someone said, a fellow anchor, I was talking about a cryptocurrency stock that was rising. He's like, is it in the DAO? And I'm like, which DAO? He was like, the DAO. And I was like a decentralized autonomous org. He was like, no, the Dow Jones Industrial Average. So that was a nice, they sound the same. It's confusing. But how do you see that fitting into the work you are doing and that particular method of organizing evolving?
So our general perspective on DAOs is that and we're really excited about this because it provides a way for democracy and democratic systems to evolve, but at the pace of technology. When you start experimenting with sort of democratic systems, which is what a DAO really is, it can have very disastrous effects if you do this in the running of a country and you have to experiment, and you can't really do the sort of MVP DAO approaches on an actual government. That would be a problem. But we can learn from this when you use it in virtual systems, whether this is a metaverse, whether it's a running of a token system, whatever that may be. And we see this emerging, you should expect that there's going to be thousands and thousands, if not tens of thousands of DAOs operating. I also think DAOs could be the future of work and in terms of the future of companies as well. Like in the same way that companies are in some cases bigger than countries, I believe DAOs can be bigger than that as well. And the main point of this is that it's community interest. Now, the classic argument has always been, well, if you have consensus by the masses, and how does anything move forward? And is there always people going to argue and nothing happens? Well, I mean, welcome to democracy, right? The one thing about democratic systems is, yes, maybe things don't move as quickly. On the other hand, they have good self-correcting mechanisms, provided that the community has the respective version of a national interest. And that's what we believe will happen. We think that DAOs create a form of micro-communities and micro-nationalism inside these type of ecosystems that are forming. And that, not to say that every DAO will succeed, just like every country doesn't succeed, but the ones that do, the ones that create that common thread, are actually going to be the ones from our perspective, sort of some of the biggest things, because everyone has a stake in it, as opposed to where only a small minority has an interest in it.
All right, we only have about 90 seconds left, and I want to make sure to get to this while talking about democracies. You and I chatted by phone about a week ago, and you were talking about democratic liberalists who are staunchly anti-crypto, and how you kind of see this more broadly as just an outright war on capitalism. Can you just give us your hot take on that?
So, I mean, this was something that I didn't really appreciate it until I was stuck in the US because of COVID. And my strong democratic sort of pro-liberal friends are actually didn't like crypto. And I didn't understand that. I couldn't connect it until I discovered that they didn't like capitalism. Now, I don't mean that in the sense that they don't appreciate that the system of capitalism and democracy might be connected, but that capitalism has, particularly in America, been the source of great injustice and inequity for the last 2 or 3 decades. And so they see this as a problem. They see capitalism as an ultimately only monopolistic outcome, and therefore, needs to be fought against. And so from my perspective, at least from an outsider perspective, I see this essentially as a different kind of war that's taking place, and perhaps maybe even at the heart of some sort of American politics right now around sort of, the perspectives on that. Now, our view on this, though, is, and this is the understanding, crypto, and particularly Web3, actually has very strong anti-monopolistic qualities to it. In fact, the fact that data is an open construct, that you can compose freely on top of it, that you can't have these monopolistic practices, is actually of benefit. And I feel like if we can explain that better to them, they'll understand that actually Web3 and crypto is perhaps the answer that they seek, to have both a capitalist system that can also be equitable.
All right, on that note, we will leave it. Yatsu of Animoca Brands, thank you so much.
Thank you.
Please welcome to the stage Atmos Labs founder and CEO Kevin Beauregard, Coco CEO and Alien Worlds co-founder Sarah McKenna, and Wax and Tether co-founder William Quigley, with Bloomberg's Emily Nicole.
Web3, blockchain, gaming, the metaverse, pretty much every buzzword you can fit into a title. We're going to talk about it now. So I've been joined by some great panelists from the worlds of each of those individual things. But I wanted to start off actually with, if one of you would be up for doing it, describing what is the difference between the metaverse and virtual worlds in that sense and blockchain gaming, because often they are conflated, and it'd be good to kind of understand the difference between the two, if any of you want to take a stab at it first.
Yeah, so it's possible, I suppose, to imagine a blockchain game that isn't a metaverse, especially if that blockchain game doesn't really create a shared space. So I think the concept of a metaverse being a digital space in which people are coming together and interacting with each other, query how immersive that has to be, for example, at the graphical layer. But that quality of it being a single space where people are coming together, I think, is probably definitional to a metaverse. And some blockchain games perhaps don't really contain any element that would bring people together within a space in that way. So one kind of prototypical thing that's emerged to define that has been the concept of land. So land within a game would probably help to promote the concept of that game being a metaverse, but it doesn't have to involve land. I think it could also just involve tokens, so tokenizing enough elements of the system that are co-owned and around which people are coalescing. But yeah, I don't think every blockchain game is a metaverse.
Yeah, because so your game, Alien Worlds, is the most played blockchain game space at the moment. But also I think something you kind of picked up on there is about the financialization of gaming, and we've spoken previously about how, not every blockchain game takes that the same way. William, you obviously run the blockchain that Alien Worlds is based on, Wax. How do you kind of see the financialization of gaming evolving, particularly in the blockchain space?
Well, it's been around for a long time, since my partner and I were doing the trading of skins. So skins are video game virtual items, and those were used in much the same way that kind of other blockchain-based tokens are used now. That started in the late 90s. Once you could trade an in-game item, very quickly, guys like us and others decided to create marketplaces to allow people to trade those for fiat. And so that's been going on for over 20 years. People buying or basically trading their work, right? So having to do certain activities to earn virtual items in a game, and then going to people who have less time but more money and selling them to them. Many of the early people in that industry, in the video game virtual item trading industry, went into crypto. And the main reason was because something Web3 or Metaverse promises, which is a permissionless environment. And so from my perspective, that's fundamental to anything we call a metaverse. It would be why something that Meta or Facebook is doing would, in my mind, probably never be a real metaverse, because they are never going to allow open permissionless software development to do whatever you want to do. And the reason they won't allow it is because it would not conform with their business model. Because ultimately, the first thing you would do is try to figure out a way to not pay the platform operator, which in this case would be Facebook. So metaverses that are controlled by one entity that has a prevailing business model that extracts value in some particular way, yeah, in my mind, wouldn't be a metaverse. But certainly it's almost a nonsense word now, because everyone you ask has a different definition of what it means.
And kind of picking up on that as well about like permissionless versus permissioned blockchains and these games. Kevin, I know at Mosabs you're thinking about this a lot, the idea of interoperability between games. That is definitely one of the biggest stumbling points for trying to encourage more traditional game studios to get into blockchain gaming, is how do you foster this idea of interoperability and being able to take something from one game to another?
Interoperability is one of those really, really hard problems that we talk about a lot and we throw the word around, but it's fundamentally really difficult to do, right? Just thinking about an art asset at sort of a baseline, right? Like what something looks like in a virtual world that gets built by one company is or should look completely differently. Now, when you extend that idea to the attributes that asset has, right, there's no way that a sword in one game should function exactly the same in another. Now, that doesn't mean that interoperability can't exist or can't work, but what we're talking about really is this, like, should I be able to have asset portability in the sense of, can I show off, or can my digital identity be representative as I move from one of these interconnected virtual worlds? And backing up just a split second to this idea of the metaverse, right? The metaverse is really just the next evolution of the internet. It's really a series of interconnected digital worlds, and so our ability to move assets, blockchain is what facilitates that, and that is fundamental to its existence. And so again, interoperability, you're never going to have one-to-one parity in terms of interoperability, where one asset in one world is exactly the same as it is somewhere else. But if somebody owns a Bored Ape and they want to show that off in a different game, that's part of their identity. That's something that is not only doable today, it should be the kind of portability that we're building towards.
But something that we've seen so far as well is that a lot of this portability is being explored through bridges, which are basically platforms that you can move assets from one to the other, whether that's crypto, whether that's something else, just to kind of make everything work a bit more cohesively together. And Sarah, we've spoken about this before, but the security aspect on those bridges has come under fire this year. We've seen a lot of hacks happen on these bridges. It's what took down Axie Infinity's platform for quite a while earlier this year. That's another big blockchain game. How do you see that space evolving in a way that you might be able to achieve interoperability without those security flaws?
Yeah, so the issue there is insufficient decentralization or kind of inadequate execution of the decentralization. So in a couple of those well-known examples, there have been decentralized bridging, like Oracle systems, but more than one of the consensus nodes has been run by a single party, and so if that gets hacked, then you can achieve consensus. This is something, of course, that needs to be solved, and that as projects are developing these bridges, they need to really realize that you need to run sufficient nodes and have those, not be run by a single party. I think it's worth mentioning that, as a space, as kind of builders of some of the largest metaverse projects, we understand the importance of interoperability, and that really this vision of the metaverse requires there being an open quality to that, where users, and the user-centric nature of an open metaverse in contradistinction to the kind of Web 2 platforms where the user is not kind of at the center of either the business model or really anything about it. And so some of the largest sort of metaverse projects and companies are coming together to form the Open Metaverse Alliance for Web 3. We announced this in Paris a few days ago, and we're going to be speaking about it in London again at the end of the week. And this is really where some of the large projects, so ourselves and the Sandbox, Animoca Brands, Dapper Labs, and others are coming together to form these standards that would then allow for true interoperability. And not only technical standards, but also sort of definitional, laying some concepts, in the ground so that journalists and others can really understand, some of these topics, like, what is an open metaverse, for example. These are, we need definitions. So yeah, we're coming together to build that.
How much of this is a mission statement as well to convince traditional game studios that blockchain is something they should be looking at? Because so far we've seen a very mixed response from game studios, some really loving the idea of NFTs and wanting to put things on blockchain, and some really speaking out against it. Well, maybe you can speak to that.
I don't think any big video game company likes NFTs. I think they treat them the same way that they think about virtual items, right? They hated virtual item trading. They hated it because they felt like they were not in control. So I think NFTs are anathema to the prevailing business models of AAA video games. And I personally don't think they will ever adopt NFTs, as we think about them. These tokens that are connected to some artifact that only the holder controls. I don't see that happening. Ubisoft last year said they were going to do, and I think they actually did do a sale. That was not an NFT. Anything that comes with pages and pages of restrictions on who can own it, how many hours you have to play the game in order to even buy it, where you can buy it. So that was more of a marketing thing. And video gamers, I would say, most video gamers do not like NFTs. Just like they don't like virtual item trading. Go to any Reddit forum around item trading, and it's just vitriol. So this is why I think what you'll have is you'll have native blockchain videos. Those people will, as a core part of the see it happening. It'll take a lot longer for them to do it.
Does anyone disagree with that?
Well, I think largely I agree, at least with the sentiment today, right? That largely dislike NFTs. I think that in that come into the space, at least not in a meaningful way, until he breaks your game economy out of 100, right? If people are going to attribute real money to assets, control everything, right? Fundamentally much more. That being said, that chasm can more gamers come over. Games up fundamentally as we are products. Within this space, as we build more compelling games, not only from a narrative and story standpoint, but top to bottom development that are designed embracing these technologies, start to close that gap. It's important to note too that the game space is like many technologies.
every platform or a new technical capability has been introduced, the incumbents take a long time or never embrace it, and a new set of companies go in and do great. From arcades to PC, from PC to handheld, handheld to console, console to mobile, mobile and Flash, then Flash, mobile, went to blockchain. And every one of those transition points, the dominant companies in that market didn't embrace the new technology, and a new set of small companies or indie developers came and created huge franchises. So from a venture capital standpoint, I like it. And it also makes sense from their standpoint. If you have a multi-billion-dollar game franchise, would you port to a platform that could undermine your business model? You'd probably be hesitant. So I think they're correct in being cautious. But while they wait, companies like these and others are learning how to actually build in that environment.
And Sarah, how are you seeing the pace of adoption grow at the minute? Because we obviously had a major takeoff in a lot of the blockchain games, especially last year. But this year, if we look at the latest data coming from industry reports like DAB Radars, we see that kind of it's slightly plateaued. It's gone a bit stable over the last 2 quarters. So what's the kind of the pace adoption been like, and how do you see that growing or returning to growth in future?
Yeah, I think actually kind of possibly the big story there is that adoption hasn't tracked prices as closely as people who claim that the only value of playing these games is the play to earn mechanic. You would have expected to see a closer correlation, and actually that hasn't been the case. And so I think what that speaks to, perhaps it could be a number of things, but for me what I look to is community. Community is one of the stickiest layers that can exist between people. Once people feel that they're members of something together, that is something that they're willing to invest time in across cycles and across different iterations of the technology and so on. And that's really when we talk about adoption, what we're really seeing is that communities are onboarding more people and new communities are arising. And the fact that that's such a compelling part of a tokenized metaverse game. And that is such a key distinction, I think, to Web 2 versions of gaming or previous iterations as well, where obviously communities arose, because human beings will always want to meet each other, and if they share something in common, there will be a level of community that rises. But this is baked into the DNA of blockchain gaming, is that what's important about the system and ownership of the system is tokenized, and that ownership is dispersed and is widely held, and everybody is a co-owner, therefore. And then you just unleash this massive amount of innovation, right from small little Twitter competitions, around giving out NFTs, all the way up to guilds, for example, that would actually create technology around other games, and everything in between. That is a consequence of the ownership. And so adoption I see as continuing because these communities are compelling. People are co-owners of the system. They're invested, and that's what's driving the system forward.
Yeah, the play-to-earn mechanic had a flaw, and the flaw was inflation, right? These were perpetually inflated tokens that you were using your NFTs to mine or to acquire a token. That token might then be traded for something else. But the more players you have, the more that token gets mined, the more it gets sold, and without price support, it collapses. So there will need to be an alternative to that particular mechanic of mining an in-game token using NFTs. I think that people now kind of see how it's a constant downward trend on that token price. So there needs to be modifications. And those are coming, but a single new approach hasn't been developed yet.
Yeah, because just picking up on what you guys are saying there about guilds, that's a very big topic within the world of blockchain gaming right now. If we think about a game like Axie Infinity, something that was very difficult for it during this period was the fact that as the price of the NFTs required to start the game went up, traders would come in, buy these expensive NFTs, and sell them back to poorer gamers who were trying to come in and treat this as a livelihood, and then take a share of their royalties, and basically creating a perpetual form of labor happening within the game. those are obviously things that aren't new to blockchain gaming. They've been
They're not
around
new
forever.
to the gaming.
No, but how do you, as creators of these games, try and think of ways to get around that, Kevin?
If you design a system that looks like work, it's probably work, right? Like that. At the end of the day, play to earn in its basest mechanic is you are just performing a unit of work in order to extract value, and then you have sort of infinite sell pressure, as William said. Guilds specifically, I think guilds have been around for a long time in gaming, right? Guilds have been, and fundamentally they serve a very good purpose in terms of intent, right? In that it's often a way in which a community self-organizes to solve a particular problem, right? In World of Warcraft, it was intended to be a social game, and guilds were a way in which people collaborated to perform raids in game. It's just gaming together. Now, in the case of a system where there is fundamentally value that can be extracted, did guilds potentially get a little bit exploitative? It's possible, but fundamentally,
I think that's their design. Yeah, I think the difference between a guild in WoW, World of Warcraft, versus a guild, which is a team effort to accomplish a mission, versus these guilds, which were basically capital providers to allow people to access some NFTs and then mine and then get a share of it. That's perfectly fine. I mean, I think that's a fine thing to do, but it's toxic to the game, because if you have all these people just playing that game with the intent of just mining the token, what about the gameplay itself, right? So I think any game that had a lot of these capital guilds attached to them, those games were doomed.
Yeah, I mean, Sarah, as a creator of a game as well, I mean, how do you work to try and make sure those guilds don't appear in what you create?
Yeah, so we don't have guilds that have arisen in alien worlds. What we do have is communities that have come together. So for example, we have landowners that have collectively created reward mechanisms on top of what we provide, for example, mining competitions, leaderboards. There isn't an economic model there that's akin to what you're describing, where there's an NFT rental model. I think that self-organization of players into units is a wonderful thing. That's teams, and in fact, our DAO structure gives a formal way for that to happen, so our DAOs compete with each other within the game itself. NFT rental is really a consequence of the fact that NFT prices got so high. And I agree that, it's indicative of a system in which there's probably a one-way outflow of the token, and people are trying to capture as much of that as they can. What's really important in these systems is that there's a closed loop of tokenomics, so that people, are, playing to earn, but then they're using what they've earned in order to continue to play or to take a more strategic stake within the game, which is how we've designed our system where you use the fungible token, which you get through mining, back into the DAOs.
Yeah, because it's kind of the idea that if you invite speculation into a game, you inevitably bring in people who aren't into the game and don't want to play the game, but want to make up some money out of it instead. And that's kind of what we've been seeing in the industry so far.
Yeah, and then games like CSGO, #1 skins game, billions and billions in the secondary market in that game. The difference is, though, that there's not a token. It's just a skin, akin to an NFT. This problem goes away if it's just NFTs in the game. When you have a token to mine and that becomes the principal object, that's where I think the gameplay gets compromised. And that's why we need a new method or a new approach to blockchain-based gaming. Other than that,
I think at the end of the day, it's about maintaining, at least from my perspective with Atmos, it's maintaining competitive integrity, right? You want to build a game that is fun to play and is at some point competitive amongst other people who are playing it. And if people just want to play an economic simulator, then ultimately you're breaking that competition piece, or they're only going to play the economic simulator component. And so it's important to, if you do have those things, you separate them in such a way where you are preserving competitive integrity and that there is not a way to level up. But regardless, it really comes down to building games from the ground up that are ready to handle users that are looking for that type of opportunity.
Did you have something you want to add?
Yeah. I would just say, for me, the promise of blockchain gaming is to end the hegemony of the app stores, some of the other massive platforms, Tencent, Steam, where they're substantial value extractors, and they compress what you can do. There's very little innovation allowed in any of those platforms because they compromise their business model. So blockchain gaming lets anyone build anything, and therefore you have a lot more variety, a lot more innovation that can happen around games. Apple and Google in their app stores have really strangled that innovation.
Sure, but then how do you kind of get around the issue of discovery, I guess, finding new games to play? Because that's usually what these app stores become.
But look, I mean, I started with PC games. PC games always had that issue. And I think you will tell, if you ask any indie game developer, what environment did they like? Flash games and Flash game development or app stores, they'll take Flash games any day because you could be anywhere on the web, right? And figure out a way to get people to come after you. But if you're an app developer, a game in an app store, there's only 20 in the top 20. That's all that's going to be visible unless you are paying millions of dollars a month. So it's great if you're super successful, but if you're a middling developer, you'd rather be on PC than be in an app store.
Yeah. I would say, crypto is actually a brilliant place for discovery to happen because the community is so vibrant, liquid. They communicate, forums and Discord. This is where the community is finding where they want to be. So it's community where these games arise, where people discover other games. And it's actually where the entrepreneurial innovation happens too. And so if we see some economic models that are less than optimal, I would say that's kind of a price worth paying for the degree of entrepreneurial activity that is happening in these decentralized metaverse environments. And as long as we also see substantive gaming happening too, hopefully created by the community, rather than just the original game creators, then that's the sign of a vibrant ecosystem. Right.
Yeah, and going back to just William's last point there, right? If we're trying to build this idea of an open, decentralized metaverse, blockchain is the backbone of doing that, and we absolutely need that level of innovation in order to do it.
Yeah, great. Well, I think that's a good place to end. Thanks for joining me.
Thank you.
Thanks, Helen.
Thank you.
Anybody who wants to hear my opinions about Elden Ring can come find me after so we can talk about gaming some more. We made it. You did it. This is the end of our Bloomberg New York Crypto Summit. You have heard obviously about Web3 and gaming. You've heard NFTs. You've heard invocations of various dead philosophers. What a day, right? Never let anyone tell you that crypto is an uninteresting place. So we hope you enjoyed all of these conversations. I want to thank all of the people who worked so hard to pull off this event, the moderators, the speakers, the panelists, the makeup artists, like everybody has been doing such a terrific job. And of course, the Bloomberg would like to thank our founding sponsor, Grayscale. You heard from them a little bit earlier today. If you want more information about Grayscale or any of the other things that you saw today, we do have a website, and you can find folks there. The Grayscale information is on the resources tab of that event website. But, especially to the people in the room who stayed till the end, y'all are awesome. Thank you for being such a great and engaged audience. We've really appreciated your tweets. We've seen them. Thank you to those of you who use the hashtag correctly. To all the folks online, thank you for sending in comments. Thank you for sending in questions. Thank you for refreshing your browser to make sure that the video was working. We really, really appreciate you. So thank you, everybody. We hope you had a fantastic time. The replays of all of these will be available on demand on all of the usual places. Please do check it out. And of course, please check out our coverage of everything to do with crypto on the Bloomberg terminal or on a website near you. Take care, everybody.